Herbert gave me a
Oh,
complex.
now,
I'm gonna go curl up in the ball.
while we have Jeff, please address how Wall Street doesn't get it. I mean, why
Yeah.
are they adjusting price targets to the lower end
Okay,
now
wait.
after
Yeah.
the earnings call?
I've got
Please.
something to show on that. Watch this, okay? I just did a show on this. This is the day after the earnings, Jeff. I have no friggin' idea why. Citi raised the price target, but UBS, Canaccord, Truist, Mizuho, they all cut target price. How can you cut?
At $2 when the stock took $25 in 48 hours.
Well, I mean, okay, so there's a couple sides to this. One is
The company and the product. Don't look at the quarterly stock movement.
A very realistic bull, questioning certain decisions.
the rational bull. I enjoy listening to bears.
Looking for the red flags. You're supposed to react.
All right, everybody, welcome to Cyber Bulls. We are in a unique time right now for Tesla, both the business and the stock. I personally think that we are kind of at this major inflection point. I want to discuss that with the group here. We've got Alexandra Mertz, also known as Tesla Boomer Mama. We've got Jeff Lutz. He's only known as the Jeff Lutz. Great one, Jeff. We're going to talk about who is buying Tesla and who sold when it was down and everybody thought it was going to continue to fall. We're going to talk about Ron Barron. He was on TV and being interviewed today, talking about that this is the bottom. ARK Invest has been buying a lot. We'll review what they've been doing. And then we're going to talk also about the forecast for the end of this year. What did Alexandra and Jeff and me, what did we call correctly? What did we call incorrectly? And then what are we thinking is going to happen for the rest of the year? We definitely will need to talk about Robotaxi. There's been new information that was shared. And then you need to vote. We're going to give you how to, all the details you need on how to vote on the annual shareholder meeting. Welcome, guys. Welcome, Alexandra and Jeff. How are you guys doing?
Hey, Herbert.
Great. How are you?
I'm doing great. I've had a smile in my face since the earnings call. And I just think tell me if I'm wrong. I do think that we are at an inflection point. You know, for us long-term bulls, it's been tough. It's been flat for 3 years. I'm not saying that the stock is not going to continue to fall. I'm not saying that at all. What I'm saying is that the story that we've been telling everybody is that this is a disruptive technology, Tesla. And for disruptive technology, you have to believe in the disruption. And one of them, of course, is what Elon said, the auto and automobile, the autonomous capability. If you don't believe that Tesla can achieve autonomy, don't invest in Tesla. And that is correct. The people who think of it as a car company, terrible car company, because obviously it's cyclical and hard industry, you're going to fall, it's not going to be a good business. But we believed in this disruption, right? Energy, bot, and autonomy. And what we're seeing today is that these are all coming. What's funny, what's interesting is even the auto business itself is also turned around because now they gave a path on how to actually do using the existing car models, the existing production lines to create an affordable business. So even the drivable cars will have a path forward to even achieve 50% growth, guys. 50% growth just on the drivable cars. So for me, it's an inflection point. Not for me, but I hope that this is something that investors will get. What do you think, Alexandra? Let's start with you.
You're right. I mean, I disagree with the definition of terrible car company. It's not a terrible car company. It's the best car company, but it is the most challenging sector, right? The car industry is a very, very challenging sector. So that's other than that, I completely agree with you. Yes, we are an inflection point because we are at this point where the light at the end of the tunnel appears, right? And it appears actually for all three growth vectors, meaning for energy, we actually see it already in the earnings of Q1, and there's much more to come. The bot having a reasonable expectation of being usable in Tesla factories this year and being sold next year, and obviously autonomy. And I calculated today, August 8th is 105 days to go. So next Tuesday, we'll be counting down from 100. So it just becomes so very tangible. It's sort of, we knew this. We knew Autonomy Day since 2019. Everybody here has studied that. But, the up to the moment where we saw Elon drive last year in August with the first version of V12, you felt it was getting gluey. It was, it was difficult to get to the next iteration that really was a step change. And then came this big movement. And since then, the iterations have become more and more rapid, addressing more and more of the edge cases. And you can just, follow the curve now and see how realistic it is. At the same time, we're hearing rumors. That's a perfect chart for that. Maybe you want to get into that, Herbert.
Oh, I think it's Charity Trades has created this. I think he just renamed himself. But I mean, it just gives a timeline of events from August 25, when he did his live stream, like you said, to most recent of the layoffs. And you can see how the days of releases just used to be 28 days, 20 days, 10 days, 20 days. And now it's 2 days, 3 days, like that, 12 days. And so things are absolutely accelerating.
Yeah, he's called Lord Flacco again, which was his handle. A while ago. He was actually asking one of the questions about 3 or 4 years at a shareholder meeting at Elon. Is the cutest. Absolutely love the guy. So I think us Tesla Bulls, we're relieved to get to this point, but we're nowhere surprised. And what is actually surprising, and I think we get into that subject in a moment, is that people that we thought were with us during this long stretch of having to wait for it and having to get proof of concept, well, we've lost some of them. We've lost some of those bulls, and they were in that time where it was getting difficult, when the stock went down to 142 again. They were getting upset. Some of them sold, and lots of emotions. The day, what was it, Wednesday, when we're up 12%, and today Thursday we're up again. This sequence of high growth in the stock was really needed to reassure the retail investors that believe in this stock and know that there is much more to come, and then getting that confirmation from some with the best research, because I consider Barron funds and ARK Invest doing the best research. I don't agree with all of the methodology at ARK, but there's no doubt that they have been throwing the best minds into their Tesla research and have good access to Tesla themselves. So when they want to have, as does Ron Barron, he actually explained that he was there both at SpaceX and at Tesla last week, or last couple of days. So that gives retail investors the reassurance they need. When these people have access to the management team, get their questions answered, purchase with a lot of opportunity. We'll get into ARK in a second. That helps retail investors to stay focused and believe.
Jeff, yeah.
Yeah, I think what Tesla did on the earnings call was to really start connecting the dots between where we are today and what an autonomous future looks like. Did they have to lay out? By the way, I think they went into a fair amount of detail in terms of vehicles and a little bit of timing. And I think there will be more, information to come. I think there was more detail on the earnings call than we've seen in the past about product. And I think what they did for us on the earnings call was lay out that path. Now, what's interesting is to kind of gauge the response of various different investors or people on X, and also both their response to like what happened in Q1 and what did Tesla say they're going to do going forward. But I think everybody universally agreed that if it was kind of a poor call without information, it is what it is, macro view, the stock was, probably going to be under more pressure. But we got the opposite. We got the complete opposite. We had a team. We even had the CFO talking about how encouraged and quote unquote a bright future is in front of the company. But now, I mean, there is a reality of there is a Q2, there's a Q3, and there's a Q4, and there's going to be product announcements sprinkled along the way. The question is, what's the company going to do? And they even gave us a little bit of guidance of how they think the rest of the year will go for the real short-term thinkers. They even gave us guidance about, Q2. So I think everybody got a little bit of everything in terms of information from that call. Now it comes down to, they have to execute. But if you look at the reaction of the stock, I think it's up over 20% since the call. That's telling you that the investor community does, believe, that the management team has credibility when they say, what they say they're going to do on the call. The investor community, is lending them credibility and saying, we believe you're going to do that. And it's pretty reasonable. They are the number one manufacturer of EVs in the world. They've led on every front in terms of this. When they say that they're going to introduce certain vehicle types, they're going to pull forward certain pieces. What I heard them say they're going to do, when I put my kind of filter on and understanding from a product and manufacturing perspective, is they actually de-risked the next generation platform, in my opinion. They also de-risked the transition from the Model 3 and the Model Y to that platform by pulling some of those components forward. So from my perspective, is thinking of someone in product, someone in manufacturing supply chain, I loved everything I heard. They also even explain what happened short term in Q1, and they explain what they're going to do with that inventory. Like, to me, like whether you kind of just have an investor hat on or you're thinking about it from a product supply chain, like they really answered questions to me with the kind of detail and the kind of rigor that you'd want to hear, and the market's responding to it.
Love it, Jeff. This is good. Before we move on, Jeff, you notice that in your glasses, we can see the reflection. So I can see that you got a ring light and you've got a window. There's a lot of people that want to know your office. Would you ever share?
Yeah, I'll turn around. I can probably share a picture later or something. I'd have to clean my desk up a bit. It's got a bunch of spreadsheets and
you know what's on my desk? You know what? I've got my cue cards to learn from my naturalization.
Oh yeah, when is that?
I don't know yet. I got the little message saying we sent you the invite. I don't know yet. So there are 4 amendments to the Constitution about who can vote. Describe one of them, and then I have to learn it. Question 48.
Unbelievable that you're only doing that now. I mean, I did that, of course, a long time ago.
Now you're giving me a complex, Herbert. How about that?
Well, okay, just a little aside. People who immigrate into the U.S. know more about the U.S. because we have to study it. So
I know. I agree with you. When did you do yours? Which year did you do yours?
I don't remember. I don't remember the year, but it was like, okay, because I'm Canadian, right? And so it was like TN visa, which is a 1 year. It makes it easy for Canadians to work in the U.S. Sure. TN visa, H-1B visa, 3 years, H-1B visa, green card, and then citizenship.
Wow. Isn't it horrible the way it is? I mean,
and I'm like I'm a special individual.
Exactly. That's like 11 years, right?
Well, not exactly, but yeah. I mean,
so you got it by being sponsored by your employer, EB2?
Sponsored by the employer, yeah. But I'm supposed to be easy. I'm Canadian, so it should have been a little bit more simpler. But
nothing's easy, even for Canadians.
Nothing's easy.
It's tough.
Well, let's not stick there, but before we get to the Elon politics. So we are at a major inflection point. You both made great points. I mean, obviously, it was a really good earnings call, and there's people that have been buying before that. I got to give you guys, those people, credit for buying in the last several months when it was like dire. It looked like there's some people are saying no earnings. It's going to be $2 earnings next year, and it's going to be even flat and worse for the rest of the year and even next year. And when people say that, I always think that the sentiment can switch really quickly, and hear it happen like a week later, it changes, and now people are like talking very differently about the company and the stock. But it was a very unique situation. I think that they really changed what the company's about and they gave backing, and then they invested in AI, right? Alexandra, you and I were one of the few that were saying that they should be investing, billions.
And they did 10 billion.
And which is the number,
You said,
we're saying.
exactly.
Yeah,
exactly.
we were saying they need to spend this much. We need to spend this much.
Throw it at it now.
In fact, to the point of even raise money. And I love what they did, right? So they cut layoffs to save $1 billion a year so that they can invest it in AI. What do you guys think about that? That was, I think.
I love the new glasses of Jeff. Jeff is challenging me.
Trying to get the reflection down.
He's changing intra show.
Herbert gave me a complex. I may have to leave the show.
I love you, Jeff.
Herbert gave me a complex.
Now,
While
we have Jeff. Jeff, please address how Wall Street doesn't get it. I mean, why are they adjusting price targets to the lower end?
Okay, wait.
After the earnings call?
I've got something to show on that. Watch this, okay? I just did a show on this. This is the day after the earnings, Jeff. I have no friggin' idea why Citi raised the price target, but UBS, Canaccord, Truist, Mizuho, they all cut target price. How can you cut?
At $2 when the stock took $25 in 48 hours.
Well, I mean, okay, so there's a couple sides to this. One is the company missed revenue, they missed EPS. I think there was a consensus belief on Wall Street that they were going to do somewhere in the order of 10 to 15% growth from the prior year to this year. And I think one of the analyst questions was, do you believe you're going to be flat versus last year or higher? And he did answer like that we're going to be higher, but there was no specificity around it. And so I think there's some uncertainty. And again, I think when you miss a little bit on earnings, you get hit a little bit. It's almost like a robotic process. It's almost like they didn't hear what the company said, or they don't believe it. It's up to them. They can do whatever they want. I know I think it was Bank of America took their price target up significantly. So it's interesting. It's almost like it's a little bit like the Fed. The Fed has all these like 12 governors, and when they're voting, it's interesting when they're all in consensus versus when they start kind of cracking and there's all this variation. And then all of a sudden they start moving the other direction. So with the analysts, they're kind of late. It's almost like they're late to downgrade, and they're also late to upgrade. And you have to go back into and like, well, what are they actually looking at? What data are they actually looking at? And when they go to a factory, when they do a factory visit, who's on the factory visit? What questions are they asking? Do they, so I think there's a real gap in understanding of definitely the cost side, the supply side, and maybe even the product side a bit on a lot of the analysts. I would say most of them that I've seen, but they do have other sources and inputs of data. Everybody was wrong on units, and then they missed slightly. So yeah, I can see some downgrades coming in, but obviously. The question is who's buying, and maybe we have some information on that. It is a little bit confusing to see that kind of the response from everyone, because it looked like Wall Street took the stock from the 180s to the 140s because they thought this Reuters story is real. There's no next generation driver driven vehicle. It's all going to be Robotaxi. The company's betting the farm on it, and they clarified that. And so I think some analysts got that. Some analysts are like, we're still concerned. And then they saw the EPS miss. They saw the little bit of the revenue miss, which were smaller misses. And then the lack of kind of a formal guide, still, that's probably why there's some pressure on price targets.
Wait, where's the lack of guide? They gave a guide. They said, Elon said, right, I'm expecting to have higher sales by the end of this year than it was last year. In fact, I think Q2 is going to be better than Q1. So isn't that good enough of a guide? It doesn't have a good
last year, Herbert, I mean, it's better than what we had in Q1. But last year, to answer your question, last year I think they literally gave goalposts of like we're going to be between 1.8 and 2 million. We're going for this number, and all he really said is we think we're going to be higher than the prior year. I think there's some. I also think that some of the analysts are probably like, well, okay, you've got to introduce new products, maybe to get there, or are you going to cut more prices? Like, so there's kind of questions like, how are you going to get there when you only did 386 in Q1?
And clearly, you're completely right, Jeff. Clearly, the analysts that reason with an Excel spreadsheet here are completely lost, because it just shows them alert signs all over the place, and they're like, oh my God, this is going nowhere. I have to cut the price target. But that's just it. You cannot analyze Tesla with an Excel spreadsheet. That just doesn't work. I mean, I'm not saying you shouldn't try to put your numbers down and whatever, but it, especially now, and you summed it up with the right word, it's an inflection point. You can't say, oh my God, they're selling less cars, this is going to 125. I'm talking about pencil neck Sakonagi. So you can't do that, because it may be still next quarter bad, but the big news is coming. It's like as if you're at the train station and are talking about the bus schedule. No, the train is coming. The train is coming.
Didn't you guys love it?
There's not, sorry, Herbert. There's not details of how they're going to monetize, like what are the economics around a Tesla Robotaxi, but they're laying the groundwork of like what it is. And they showed the app, they showed other things, but like some of these analysts, I think the better ones, kind of see it and get it, and they probably have the higher price target, and because they don't want to be whipsawed around. And the other ones are kind of like, just again, it's all spreadsheet driven. The only thing I challenge on the spreadsheet side is it seems like they don't know how to do the COGS and they don't know how to do the supply side. Because if you knew how to do the COGS and supply side, you would have known that the 386, could have been, 40 to 70,000 units higher easily by just connecting some of the dots on supply. Tesla has unconstrained demand. That term is very important in the industry. Unconstrained demand means that's unmet demand that you have in your business, where if you could supply it, you would be able to sell it. I'm not even talking about Cybertruck, just the Model 3 alone and the timing issues on the Model Y. So what if that quarter was 420 to 440? I think we'd be having a different conversation. I think we'd be having a little bit of a different conversation. But it was such, it kind of brought everything down with a 386 number, and it started there. But I think there's a gap in understanding of, there's so much spreadsheet work happening on the sell-in side, but not on the supply side and the COGS side. They killed it on COGS.
Exactly. You're completely right. And you actually saw it coming. Want to really tell you how well you did that. But the second thing they also miss is, so what robotaxis? Because they're still stuck in, FSD take rate, $99 a month, there's not much juice in there, that's a couple of 100 million, that doesn't make a difference. No, I mean, and there are loads of those. They don't see any business model. They don't understand that $99 is a current level 2 subscription, that if you use the car, it's going to be much more expensive if you use the car as a robotaxi, and there will be profit sharing of the robotaxi activity. So and when you tell them that, they just look at you like, yeah, you believe anything. So there's just this complete disconnect between acknowledging the prowesses of current Tesla construction, right? The COGS and the supply chain that's so well managed, and how the future model is a clear software as a service model where you have to plug in completely different premises. I don't want to be too optimistic, but with the earnings call on Tuesday, it's become clear to me that we're not long years away. We're probably 1 or 2 years away from the moment that Tesla will change from the consumer discretionary to the tech field. I just want to make sure everybody understands what that means. The index funds in the tech field are a multitude higher in volume than of consumer discretionary. So by doing that jump, it will be comparable to what happened in 2020 with the S&P inclusion. It's going to be horrendous because it's going to be at a much higher price. So that is coming. It's not coming this year, but 2025 maybe, and 2026 I'm very sure about.
Yeah, okay. So I was just trying to find it and I couldn't find it. But do you guys remember that moment in the earnings call when Elon or somebody asked the question, one of the analysts, and asked the question of automobiles, and he said, "You don't get it."
That was my
It's
friend
like,
Saganagi. Yeah.
okay, I was right there. Sakanaki says, yeah, automobile, and he said, Elon said, like it's like asking, the horseless carriage, how many are they going to sell? And I'm about to give you a carriage without a horse. It's like you're asking the wrong question,
And
right?
then his follow up was wanted to know more, and then Elon told him we're not going to talk about that. So and then obviously, and you will see there are Wall Street analysts today. They are going like, how can you be so irrespectful of Tony Saganagi? Come on, this guy missed Apple. He was the Apple analyst, and he missed it in 2007. And he's missed Amazon since, and he is now missing Tesla. I'm sorry. He does his job badly, others do their job well. I don't feel we owe anything to Tony Saganagi. I just don't feel like it.
Okay. Let's see who's buying Tesla right now. And so you shared this, which is very cool, Alexandra, thanks for that. A person named Time Traveler Carlson Trade, Stock Market Micro, MCRO. I have no idea what he's talking about here, but he basically looked at the inflows of who is buying the stock and the outflows of who's selling the stock. And it looks like that the outflows are negative, like minus 23,000 or something like that. And 3 million is inflows. And so his point, right, Alexandra, is that it must mean that these people who are buying are more long-term and less short-term people, right?
But especially it means that this is a net positive. So we're not having these day trading situations where people just, go in at 10 o'clock and get out at 1 o'clock again and have or 5 seconds later and have their gain or their loss. But these are people that are carrying it over. So that usually is a good carrying it over to the next day. That usually is a very strong sign. You also have to know that tomorrow, Friday, we're taping this on Thursday afternoon, is obviously a typical option expiry date. And so last Friday of April. So you will have more volume tomorrow. So those people that carried it over will come into a high volume day tomorrow. And I think he's right. I think this means that are people still buying at these levels because they think what Ron Barron said this morning on CNBC Squawk Box, that this was the bottom. This was the bottom, and there is, a whole new fresh energy in the stock.
Let's watch that. So this is Ron Barron. We're going to watch his video. And the reason I put this up is Elon liked it. Elon liked this Sawyer tweet. It's going to go up huge. Now is the bottom. Now Tesla will have the compute to figure everything out. Now you're on the verge of autonomous driving with your car. This interview was painful to watch, Alexandra.
You didn't like it? Because the journalists were bad, right?
Yes, they did not. They just don't get it. You've got this Ron Barron. I don't know, how old is he? 70? He's explaining to them 80. Yeah. He's explaining to them what's about to happen. And they're like, oh, 5 years from now, or is it ever, or whatever. So, okay, so let's watch this.
So what I think about the reason stock is down is because people were concerned that he was going to abandon the idea of having a low-cost car and go all into robotaxis. That's the reason stock is down. And then there was a report in Reuters said he's canceling this new factory that's going to make low-cost cars, $25,000 cars, competition from China. So there's only one company in China that's profitable, by the way. That's BYD, Warren's company, Buffett's company. And that's a company that makes $1 billion a quarter, and our company makes $4 billion a quarter. No one else makes money. Ford loses so much. General Motors, everyone loses money on this. It's much more complicated to make these cars. It's interesting. I was talking yesterday about motors. So motors in a car cost $5,000 a car. That's what the normal, these 100-year-old companies cost them $5,000. We can make a motor for $1,000. Costs $5,000. So they get.
No, but then you have to have a battery that's more expensive.
Oh no, I'm talking about if you're making the internal combustion engine cars. I'm just talking about how stagnant businesses become and how used they are to operating the way they've always operated. That they don't look for new things to do, new ways to operating oriented toward making things cheaper. He can do things for $1,000 that other people cost $5,000. It's amazing. That's if he wanted to be an electric car, a gasoline car company. All I'm pointing out is that people get entrenched and they do things without trying to make things better and cheaper and faster all the time. There's no incentive to do that. Munger says, show me the incentives and I'll show you how people act. And that's the idea, that people, the incentives, what's the incentive for someone who's 55, 60, we got to get off of this. But the idea is that that's the reason the stock's down. And now
So what's the reason it's going to go up and when?
Oh, it's going to go up huge.
When?
And now. I mean, now is the bottom.
Okay.
And so what they're doing is they're going into robo-taxis, and they're going to make the low-cost car. So they're making the low-cost car, except they're making it, they have excess capacity right now. They have capacity to make 3 million cars a year. They're making 1.8 million. So the 1.2 million cars they can make extra in an existing facility with no more capital, and they're not going to make the cars direct cost as cheaply as they did before, as they expected to. But overall, until they expect to do 5 million of these new cars.
Can I ask you a robo-taxi question?
Okay, let's pause it there. We'll watch the second bit when they're talking about Robotaxi question. What'd you guys react to that?
I mean, he's direct in his answers. It's great to see. There's no qualifying. When's the bottom here? Everything's kind of like a direct response. And it feels like it was kind of a little bit of a pain to watch the just how the questions are flowing in. They tend to be kind of like net negative around the name Tesla, around anything, and they start from a point of negativity, and then it's up to the person being interviewed whether they're net positive and are they going to pull the whole thing positive or not. It's interesting, and I was commenting on another interview they did the prior day, but we'll talk about that a bit later. No, but it's good. I think Ron's son, he was quoted like, hey, we really think that this next generation vehicle is important. It's really important that Tesla is doing this. I think they got the confirmation that they were looking for, and they've been right. They've been right on this, and they've been very bullish. There was some report out today that Barron's sold. They said between 2020 and 2023. Well, yeah, they sold some in 2020. That happened, and then they've held ever since. So I think firms are allowed to do sales for various reasons here or there, but it's not like there's some recent selling. So they're definitely behind the name, and they're very supportive. And I thought it was a great interview.
Completely agree. And I agree with you. He actually explained a couple of times, and this morning as well, briefly, why they sold then. The stock had gone up so much that it was overweighing everything else. It was over 50% in the portfolios. And they said, we have to trim a little bit to get it back. So they trimmed a little bit. So it was then, I think, 45 after the trimming. And then obviously it varies depending on the stock price of Tesla. So it has gone down, but it has gone down because, because the stock price of Tesla has gone down. And there was no more selling since. But obviously, they had to do that headline to make it sound as if it's now, yet it was in 2020. So, I mean, it's completely ridiculous, but there we are. I love the guy. I love how he says we when he talks about Tesla. We make 4 billion a quarter, which is true. We made 3.9 billion of EBITDA in the fourth quarter of 2020. We made a little bit more or less now, 3.3 or 3.4 billion. And he's right. BYD does 1 billion. And even doubtful about some of the economics of that part. So he always finds a way of saying in very short minutes what he's after and not letting the journalists take over, because they are just waiting for a moment where they can bring some FUD into the discussion and divert him. And he's very, very good at getting back to the line. He's one of the best advocates we have on TV for Tesla, him and Cathie Wood. And I would say he has even more credibility than her, because her funds, through the relative overweight of small caps, are much more volatile and had a tough time the last 3 years. Not that his funds didn't, but his funds performed much better than hers. So, and he's just, more of a New York or Wall Street person. I know he lives actually further up north, but it's more of an established figure than Cathie Wood she's more of a newcomer in that field. So all that to say, he did a brilliant job, and I think you want to show probably later the second part where it is so very surprising how surprised he was himself by Robotaxi, which shows me that out there are hundreds of millions of people who have no idea what's coming, right? I mean, we're obviously watching every video from Omar and from whoever else does them. We're overanalyzing this. I can't wait to finally have any of the 12 versions on my Model X, because we're living it at the moment, which is wonderful. Sometimes I tell myself, just be grateful to live this moment, right? In 10 years, we'll look back at that and really be proud of us. So it was beautiful to watch. It was really very special, and I hope he's going back there soon.
Wonderful. All right, we're gonna watch another clip of Ron Barron later when he's talking about Robotaxi. But right now, we're still talking about who's buying, who's selling Tesla. We just saw that Ron Barron, longtime holder, he holds $4 billion worth of Tesla still at this point. And let's talk about ARK Invest. And so you, Alexandra, you do a fantastic job following and who is buying, who's not. This table is too complicated for me to look at, but why don't we just start with this table here? Is this the right thing to talk about what ARK Invest is doing?
It is. Thank you very much. So ARK Invest has 3 ETFs where they invest in Tesla. The one that always has the highest allocation here, the blue line, is ARKQ, relatively smaller fund. And obviously the flagship fund is ARKK, the green line here. They have still that internal rule that at 10% they stop buying. If then the stock moves up, the price moves up, they can hold it for a while. As you see, the green line hardly gets ever up to 12%. Then they trim it again and get it back down. Obviously here, the situation I put into this chart is over 3 years what happened. So in the smaller blue line RQ, they had in 2023, late summer, a peak of over 16% of their allocation in Tesla. They were very convinced then. Then the stock price fell. That's mainly the stock price falling. And then it's coming down again, and then they're buying again. I'm coming to the purchases in a second. More interesting is actually the green line of ARK, and I know it's quite difficult to distinguish it, but there, because ARK is really, the flagship. It's much more volume. It's much more difficult to manipulate. The smaller funds are easier to manipulate. So in ARK, the lowest point is end of 2022, when obviously the stock was around $100. And then it went up, and then they kept on buying. There you see the green line. And then when the stock went back down again in this year, late 2023 and then early 2024, they started buying. And so you see what is in that red circle, this deliberate purchases. But you see those deliberate purchases much better on the next chart, if you don't mind. Herbert, exactly. So here is in red the line of the assets under management, all 3 funds together. Because we read in the press a lot that ARK has lost outflows, which is true. They had outflows in the first quarter of this year. Because remember, end of last year, everybody predicted 2024 is going to be the year of the small caps. Remember that? It's going to be small caps, small caps, small caps. Well, it wasn't small caps. And so lots of people went to ARK because ARK is obviously a small cap player other than Tesla. And then that didn't materialize because the interest rate cuts from the Fed didn't come, and so many other things. And it still was the story of the Mach 6 without Tesla. So anyway, so they saw these outflows, which you see in that red line going down since the end of 2023. These are the assets, meaning people purchasing or selling the fund, or the stock in those funds going down. So that has been going down from about 12 billion for these funds down to about 9 billion. But while this was going down, you see this is the accumulation of Tesla stock in those portfolio that despite the fact that they lost assets under management, they purchased stock. This is the number of Tesla stock they have. So they did exactly what you should do, be greedy when others are fearful. So even though they lost assets, whatever they had, they switched to increase their Tesla position. And on this chart, you see it very well. And there are very few moments where the red line going down is actually lower than the sum of the Tesla shares. I chose obviously the axis, the way to show this very well. So that happened in 2023 at the beginning, and then it didn't happen all the way through 2023, and now it's happening again. So they're building up a position where they sell other stock in their portfolios in order to get into Tesla. And the next chart shows it over a longer period. So the chart we just saw was over a good year. So this is the end tail of this chart, but you also see it over 3 years what happened. So when the assets went down, obviously their Tesla allocation went down as well. But then there were moments, you see it here through 2023, when it was subpar. They had less assets, but they still bought Tesla. And we're having now for the last 2 months the same phenomenon. They are losing assets, but they're buying Tesla. So this is really important because it is a clear shift in their portfolio management. They're giving Tesla the priority. They're obviously having in ARKW still, and in some of the other funds, the Bitcoin as a priority, which brings some volatility to it. But it clearly shows their focus on Tesla now and their conviction. And then I just wanted to add, because we got that just before we started the recording, Real Meat Kevin Pfaffrow, entered Tesla again. Now he was out of the stock for about 5-6 weeks and was very negative during that time. But today said he is going in. He also said he will vote for the yes. Now that's a bit more complicated because the date of record for the vote was the 15th of April and he didn't hold any shares there, but I guess he does hold some in his private portfolios or somewhere else. With the fund, he cannot vote because he didn't have any shares the day of record.
All right. Okay, good. So we covered a little bit of who's buying, selling. We don't need to name names of the other folks who are very well known, fund managers, analysts who just started to sell. Sell. Tesla's terrible. And then, we see a turnaround. They can continue to buy. I guess my concern, as we talked about it off screen, is just it's okay to sell. Absolutely okay. And you can absolutely have a great opinion of the fundamentals. And you're absolutely correct that the car fundamentals and all that's wrong. What I don't like is the people who sell because they have who say things negative about the company only because of their own financial scenario. If I don't have any more shares, I want to say negative things. Once I have shares, I'm very bullish. You know what I mean? It's like, man, be a little bit more, have a little more integrity. So,
Agree.
All right. So we've covered, the inflection point, who's buying, who's selling. Let's talk about what you guys think is going to happen for the end of the year. I do think that we should spend a few seconds here just talking about the things that you, Jeff, and you, Alexandra, you guys have called correctly since the beginning of this year. I really do respect people who say things, believe something, and sticks with it when the rest of the Tesla Twitter X community is fighting and saying you're crazy. One of them was when the Q1 numbers print came out, and obviously it was terrible, right? Production was much higher than deliveries. Oh my God, demand is falling off the cliff. And then you, Jeff, stood up and said, well, actually, why don't you put some numbers to the Red Sea, put numbers to the attack. Let's put some numbers to how much you had said that very likely what happened was because of the production being disrupted, they weren't able to sell the ones that they did create the second half, the last half month of that quarter. And here's what they actually said. They spent a bit of time on the earnings call saying that that was correct. The other thing that you were pretty good about, Jeff, was you're one of the lone voices that said, just put yourself back to the dark, gloomy days of January of this year. And you said, I think that there might be an FSD partnership. And everybody said, no, that's not going to happen for years from now. And then, of course, the FSD started to improve. And now we're talking, they're back to talking to some, in fact, maybe even 2 by the end of this year. So well done, Jeff. Good job. And then both of you guys were making fun of me. You had a little clip that you shared widely. because you
Pays
guys
us
were
a trip to Hawaii, Jeff. He pays us a
There you
trip
go.
to Hawaii.
because a couple Super Bowls episode ago, we were talking about what's going to happen in August 8th. And, you know, I'm trying not to be over bullish. And so I'm like, yeah, it's going to be a car. They're going to reveal the Robotaxi. They're going to talk about the program. They're going to talk about the app. But you guys went further than that. You guys said that that there might actually be the unboxed model being shown, that there's going to be an actual, you know, more program info. So, yeah, good job, guys.
Well, we'll see. I mean, we haven't seen 88 yet, but yeah, I think they would demo the Robotaxi service. And I just have a couple updates like on Q1. Not only do I think that the inventory piece, you know, is kind of a temporary thing, the build up, and there was a bunch of stranded inventory left. That also weighs on the cash position of the company too, and OpEx. So when you have your product and inventory, that weighs on your OpEx, weighs on your cash. Also, what hits we see the finished units. What we don't see are the mismatched sets of material that are in the factory, especially for the Model 3. If they're planning to build 50,000 Model 3s and they got some sort of surprise on supply with white seats or battery modules or a combination of the two, you bring in that other material. You're telling those suppliers, at least for some period of time, to produce that material and bring it in. So they didn't bring all of it in, but they definitely brought in material that's called in the industry unmatched sets. And when you have those, that weighs on the dollar value and the balance sheet for inventory. So the issue is not only a units issue for deliveries; it was also hitting the balance sheet in the form of finished goods, FG they call it, as well as unmatched sets of material. And this story will play out when we see the inventory come down in Q2. If we don't see it come down in Q2, there better be either a new issue or something happened, or there better be an explanation. Otherwise, then there is something to be concerned about. But I do see it coming down in that quarter. And then on the FSD partnership, I just want to be clear on this. I think everybody's thinking like, number one, I've told people it's going to take them a couple of years from the time they start the work with a partner to the time that partner's in production. But it doesn't mean that there isn't dollars flowing beforehand, and it'll all depend on how they construct the deal. But Tesla should be getting paid for their engineering services. Tesla should be getting paid for their intellectual property that they are now going to unveil. If you're going to start working with a partner on integrating into the vehicle, there's going to be trade secrets and know-how that Tesla is going to be reveal. So I would be shocked if there's not some sort of leverage that Tesla would want to put over those partners, because you wouldn't want to see them start and then break off within a couple of years, and then take some take some know-how and then go do something themselves. So I don't think we have to wait. My macro point here is, or just get to the bottom line, is if they strike a partnership, we don't have to wait 3 years for money to start flowing. I think money should start flowing soon. It just depends on how they actually structure the deal. So
okay, well,
pretty exciting to hear that.
I'm gonna stick my neck out and do I dare? No, Jeff. I know now, Alexandra, you were nodding your head because you want the partners. You want Ford and others. Wait. That's a separate thing. We'll bring that up later. You won.
I won.
They're not giving it away. They're not giving FSD away.
Both of you guys have said that, but you've seen Elon say and Omar suggest. We've gone through this, okay? Omar suggested and Elon said he agreed that you don't need to charge the OEMs any licensing deal for it. You will charge the customer, their customer. You don't need to charge the OEM.
It breaks my heart. I mean, I'm always, in the most positive manner looking at Tesla and wanna, but it breaks my heart because they will become dependent on it. I mean, of course they will pay in the long run. In the long run, somebody will pay. There's no doubt about it. Like people are paying now to supercharge. But it just breaks my heart because I guess what they want is have the first couple on the boat to initiate the rest. But just imagine the first one would be Toyota, right? who has made no effort in EVs, who now suddenly, let's just play, I mean, if it's Ford, we all have a little bit of a softer heart, right? But let's just imagine it's one of those that really gave us a hard time, that are now at the moment delaying EVs with their hybrid structures. And we know what they're doing with the hybrid structures. I mean, the customer that purchases hybrid, they're fooling these people. They're fooling these people to purchase higher, more expensive cars that still need maintenance. So their whole business model is still alive. They're still having a lot of petrol and engines to build and to sell. It makes me sad. So these people will now knock on the door of Tesla. It's become evident. They don't want to, but I mean, or some want to, but not everybody wants to. But it becomes an evidence that if you want to survive, you'll have to do that. And then Tesla would give it away for free. It breaks my heart. And like Jeff explained, that means having Tesla engineers having to go there, help them build the infrastructure. And as Elon explained, it's going to take 2 or 3 years, if not more, for them to build the first car with this. So I just hope, no, it's not for free. I mean, at least at cost. As a shareholder, we had this discussion
could
a
be a
completely different. Yeah, exactly. We had this discussion at a completely different subject when somebody was complaining about the fact that Tesla really isn't generous with the prices they give when they repurchase the cars when somebody switches to a new car, right? And as a shareholder, I have to agree. Why would you do that? Except if you want to put it into the Tesla fleet very soon. Fair enough. That's why, you know, they're still not allowing the 3s and Ys leases to be bought. But as a shareholder, I don't mind that they're not generous with cars being bought back at a certain price. But at the same time, as a shareholder, I don't want them to be over generous with the OEMs to whom they're selling the software. I just don't like. I mean,
Yeah,
it's not a major thing. It's not a break thing for me, but still.
we're not going to solve this in this discussion, nor was it solved on X with a couple of tweets. So ultimately, we don't know what they're going to do, and there's many things that they could do with the deal. There could be breakup fees. There could be penalties. Like, what if Tesla doesn't meet some side of the deal? So there could be a number of things that they do to protect themselves. I hope they would do that. The point is when you're entering a deal, when you have the superior product and you have leverage, there's no reason to give anything away. So I don't buy it. I don't like launching from a point of weakness like that. I'm not a fan of it. I'm not smarter than Tesla. I'm not smarter than anybody that's constructing this deal. I'm just telling you from experience, there's a number of things that they could do in the background to protect themselves, and they should do that. So we'll see how this. I'm just glad that the conversations have started, because to me, other OEMs heard that on the conference call and said, okay, well, as he said, major OEM, so it wasn't us. So where are we at? Where's our program at? Where are we at? Where are we at in disengagements? Where are we at in economics? How many years to break even on our program? What do the economics look like? And this is what really concerns me when I hear they had John McNeil on CNBC yesterday talking about they were going through the Tesla results, and they waited till minutes into the interview to actually say that this guy's a board member on GM. And the way he couched Tesla and their robotaxi services, well, they'll be number 3. Like, well, number 3, really? Number 1 and number 2, are they making money? Are they at scale? Like, just answering basic questions like that. So why am I bringing this up? The reason I'm bringing this up is it really matters that, number 1, you have a solution that works, but number 2, it can scale in units and it can scale economically. These cars that are out there, some of these cars in China and in the US, they're many tens of thousands of dollars add-ons to remanufacturing to the vehicle, if not more than $100,000. And it to me, it's more of a kind of a lab experiment driving around and not something that can scale. So anyway, point is Tesla really has a good solution. Other OEMs have to be looking like, where are we at in performance and where are we at in cost structure? I think GM has lost over $11 billion to date. They're losing multiple $1 billion per year. How long are you going to do that for before you realize like you don't have a path to break even and you need to go work with Tesla on their solution?
You know, these guys are very, very lucky, these other automakers, that Tesla, Elon has taken the position of willing to license this, because Apple did not do that. And they chose to be a walled garden, did very, very well. But Elon's different opinion, which I'm very happy by. I think it was the wrong move by Apple to do that. If they had decided to, be to license it, then I think that they would have owned more than 85% of the market, right? Or 15% of the market's where they're at today. So this is good news. So Jeff, you wanted to talk about the forecast for the end of year. What was your thinking there?
Just where do we see now that we heard from directly from the company in the earnings call, just how do we see the next 12 months playing out? So there's 3 more quarters of production. We heard that Q2 will be better than Q1. We heard that the inventory issues should be cleared up. We heard that from the CFO, by the way, as well. And then you've got the back half of the year. And at some point, we're going to have this Robotaxi unveil on 8/8. There's a number, I think we're going to talk about the vote in a minute as well. So there's a number of events coming. But in Q3 and Q4, a lot of people tune into the Tesla earnings call, and some of those people too happen to be partners of Tesla or even suppliers. So I'm sure that there was, when they heard, new vehicle programs, obviously everybody lights up. And I could just tell you from a supply chain perspective, it's going to help them on costs. It's going to help them on a number of areas. Suppliers love to be part of new programs. It's more of just understanding, where they are they on the boat? Are they off the boat? What does it take for them to get on? So over the next year, are they going to be able to start ramping up these new models by the end of the year? And I think that's one big question. And then, as they unveil the Robotaxi on 8/8, are we going to hear more timing about that vehicle in the unbox process and how that's trending? So what's nice here is I think, as you get out of the spring, analysts have to start looking more ahead into 2025. And what Tesla told you was 2025 is going to be much bigger than 2024. We think with the introduction of these new vehicles, we're going to be able to fill up and use capacity close to 3 million units, which would be a significant jump from Q4. So it's just going to be very interesting to see how the next year plays out. And then they sprinkled in, greater bot functionality, even some prototyping in a Tesla factory by year end, even delivery to customers by the end of next year. So just, Tesla went from a company that honestly for the last couple of years hadn't introduced new products every year. And now you've got Model 3, Cybertruck, you've got a couple of, in between models that could be starting at the end of this year. You've got the next vehicle platform next year. You've got Optimus, and now they're just exploding with new products. So I think the next year is pretty exciting. And one way to interrupt a trend, if you think, EV adoption is kind of, it's flatlining a bit. One way to interrupt in all of product history, one way to interrupt a trend in a favorable manner is to inject new products that people want. And that's how you can really get a pretty big bump in volume. So be interesting to see. Okay, I think just finally, Tesla's doing it in a really intelligent manner. Yeah. It looks like there's going to be significant reuse from the old platform, and then they're going to bring modules forward from the new platform. So all these things interplay with each other. You can get greater capital depreciation from the current generation products, and then you can pull forward and de-risk the modules from the next project, which will make the Robotaxi get to its break-even point and get to its scale point even faster.
So tell me if I've been listening to you guys, I've been listening to Larry Goldberg, and I had initial thoughts, and I've formed this one. This is my thinking. So they're calling the Cybercar the line of autonomous vehicles. It's not just going to be one car, it could be even a van. It's going to be built on the unboxed model on a new production line, on a new production method, right? But then they also have their existing vehicles, and they announced that they're going to have affordable models. And so what I was thinking was, oh yeah, before I move there, Cybercar is the name of the actual vehicles themselves. But then you can even have a van called the Cybercar or Cybervan or something like that line. But then the actual Robotaxi is going to be called Auto, right? So yeah, I know that he purposely left there the word Auto. Alexandra loves it. I do too. The word Auto, right? Hail me an Auto. That will be the Robotaxi service. The app will be, call me an Auto. The Auto in automobile. But the additional affordable models on the existing production lines, initially I was thinking, well, it's going to be a lower end Model 3, a lower end Model Y. They just kind of cleaned it up a bit. But now I'm agreeing with Larry, and I think some of you might have said it too, that they might actually create a new model. And it's going to be like a Corolla, which is what Larry was saying, more of a hatchback model.
It's the same. Do you understand? It's the same.
Okay. No, go ahead.
It's the same. Okay. So first of all, it's Cyber Cab, not Cyber Car.
I'm sorry. I was wrong.
Cyber
Cab. Yep. Agreed.
Good. Okay. 1-0. I love you, Herbert. I do.
Go ahead.
So my prediction, and I could be completely off, is we're going to have a Cyber Cab van and a Cyber Cab hatchback.
Mm-hmm.
And both will also exist with steering wheels. So you will have the unboxed model to build the Cyber Cab without steering wheel, just in a configuration to sit and be chauffeured. And you will have it as a retail car to be purchased for families, for the van, or for utility, for the painter, for the plumber, whoever wants a van. And those will still have steering wheels because people may still want to drive, or will have steering wheels that can be synced in or whatever else.
That's bet. Here's why.
Okay,
Here's
Hawaii.
why.
Okay, this time I'm just giving this trip to Hawaii, right? I've never been to Hawaii, but Herbert is going to pay me a trip.
I'm not willing to do that. I'm not confident enough. But listen. I mean, come on. Here's listen to my explanation, okay?
Okay.
They're creating lower affordable cars using the same production line, okay? So that means that they're going to create a version of a Model 3, right? That similar kind of car setup. The Cyber Cab is going to be built on the unboxed model. It's going to be used for autonomy. It's likely going to have the cyber look to it. It's going to be steel. It may not be stainless steel as heavy as the Cyber, because it's Cybertruck, because it doesn't have to be bulletproof, but it's going to be designed for Robotaxi. So you're not going to just create a car on the same production line, which is what we're doing Model 3, Model Y now, and then use that for Robotaxi.
Thanks to the unboxed model, yes, you can. You will have modules that will have stainless steel to do the Cyber Cab hatchback, and you will have painted versions for the retail one. I don't think this is really contradictory.
I'm on board with the unboxed cyber product model of hatchback and a van. I think that makes sense. I think they've talked about multiple form factors, but to get to ramp in a couple of months, you remember it's next week. It's May. Trust me, I'm sure the supply chain people have reminded people inside of Tesla, like, it's May next month. So if we're talking about building something at the end of this year, what are we changing? And with the unboxed model and that product already under development, those suppliers already have schedules to start those modules. And those modules would have started much earlier than the actual mechanics of the vehicle. The mechanics of the vehicle and the final assembly, all that tooling is later in the process. And that's where all the complexity right now is with unboxed model is actually the manufacturing CapEx in the factory. The stuff that goes in, they call it modules. These are the inputs to the unboxed process. This could be the 48 volt. This could be the LAN loop for communications. This could be the controller configuration. All those things have been in production in various forms in Cybertruck. And whatever modifications that were being made for the next generation vehicle, those things, if the next generation vehicle was going to start production in the middle of next year, that's general assembly. These suppliers would have had to have started many months before to feed the modules, to feed general assembly, if that makes sense to everyone. I can almost probably have to graph this out for people. So the point is what Tesla is doing is those modules would have started in some low velocity, maybe at the end of this year, early part of next year. And what Tesla is going to do is they're going to meet those modules, I believe, with things that are very similar to the 3 and Y, if not the same. They're going to make the 3 and Y. These new modules are lower cost. They're going to pull a motor out of the Model 3 and Y that's probably, I'm making up numbers, probably $1,500 or $1,600, and they're going to plug in one that's $975. Okay, and there's going to be some small tooling changes that are going to be needed to be made to those cars to retrofit this. But once they do that, they're going to be able to keep a bulk of these factory lines and all that tooling and depreciate them further over a number of years. So what they've basically done is, if you draw a line from $17,000 or $18,000 COGS to make the 25K car to where we are today, which is probably $29,000 to $33,000 COGS, they picked a point somewhere in the middle and said, we're going to pull from this, we're going to push some down, we're going to meet in the middle, we're going to de-risk. They're going to de-risk the next vehicle by doing this, and they're going to de-risk that transition to the next vehicle by letting the 3 and Y live longer at higher volume.
Jeff,
That's what I thought was gonna happen.
wait. Didn't you find it surprising that the one that they disassembled in the deck, the quarterly deck, was a Cybertruck?
A Cybertruck. Yeah.
So I was thinking, that's a sign. That's a sign that lots of that Cybertruck disassembly is going to play a role.
Oh,
So
yeah,
first of all,
a lot of
everything you
those-
said, Jeff,
Yeah,
wasn't part of the conversation that we were just having, though, right? So I'm not saying that the production line is going to have unboxed model. They already said that. There's going to be a lot of shared things that they've done, like you said, the 48 volt. The I can't remember. There's a whole list that Lars went through. I'm not saying that. What I'm saying is that is the affordable model production line version that they're going to create, is that the same? Oh, it's the same as the autonomous Robotaxi, just without the steering wheel? No. This is why the unboxed model, it's going to create the Robotaxi. It's going to be a very different vehicle than this lower affordable on the same production line as the current car. Okay.
You think
that
it's
was the
two
conversation
different
we were
cars?
having.
Okay, I don't think
Yes.
so. I think the hatchback 25, the hatchback new generation compact car is more or less the same. May not be a stainless steel, but more or less the same than the Robotaxi.
No, we're talking past each other. I think that vehicle will appear and be produced in the middle to later part of the following year. Okay. But I believe what they're going to start at the end of this year is going to be something that's closer to the 3 and Y with the modules, the lower cost modules that would have gone into the next generation vehicle, because those would have had to have started early anyway. So the question for Tesla is can they pull those up even further? But the rest of the industrial design, this new Cybercab, I don't believe that that's being pulled forward.
Yeah, no, it's not. Yeah. But I do now believe and agree with you guys that on 8.8, you both said this, that you expected not only do they show the Robotaxi, they'll show that because it's there, but they'll probably show you, they call it the $25,000 car, which is the, call it the Model 3 Lite, but it's not going to be, it's going to be a new model, a hatchback Model 2, that they'll show that as well. Because he said, I'm going to talk more about the $25,000 car then. Because in order for them to actually launch it by the end of this year or even first half of next year, they would probably do a design reveal on August 8th.
That was not what I said. I said what we will see is that they will integrate the current owners at that moment into the.
Right, that's a separate bet that you and I have.
I don't think that we will see a multitude of cars. I don't believe that at all on the 8.8, but I may be wrong.
And that won't be the car before the Robotaxi won't be a 25K retail vehicle, in my opinion.
Well,
remember,
what did he say when he was asked the question, what about the $25,000 car? He goes, we'll talk more about that on 8.8.
Talk, not show. Talk.
Well, they may demo what the Robotaxi is. I think we're talking past each other. The car that's going to go into the cars that may go into production prior to the unboxed next generation platform, I don't believe they're going to hit a $25,000 price point, because they're not going to have the unboxed assembly process and those process times to be able to do it. They're going to get lower cost modules, but they're not going to have the full general assembly side of that and all the cost savings there. So I believe that that will be some point between where we are today with Model 3Y and the 25K car, but it's not going to be already down to the 25K yet.
Okay, gotcha. Maybe they'll delay the $25,000 unboxed model compact car, but nobody's going to freak out because in the meantime, they're going to do lower, more affordable Model 3, Model Y variants. Yeah.
Well, I'm not saying that car is delayed. I'm just saying the next generation platform I believe is going to launch in the following year. They may do an unveil of what that may look like on 88. Who knows?
Yeah.
But I believe that will launch in the latter part of next year, and it's a platform. So one vehicle has to be the first car off of that platform. Does it have a steering wheel, or does it not? I don't know. Is it a van? I don't know. I just know I think they're still working on a next generation platform where they simplify the assembly side in the factory, meet it with these new modules, and then get you something closer to a $25,000 retail price point.
Okay.
Yeah.
All right. So just to clarify, the bet that you and I have, Alexandra, just to clarify, because you were like, everybody was so confused. And I'm like, no, okay, simple. All I'm saying
I'll
is
book
that
it.
when they
I'll be the bookie.
Okay, please. When they first roll out Robotaxi, the very first version of it, it's not going to be customer cars. It's going to be a Tesla owned. It could be Tesla owned Model 3, Model Ys. It could be a Tesla owned Robotaxi first created vehicle. That's what they're going to launch first for the first city, for the first iteration. You're saying they're going to launch it first with customer owned cars.
No, I said it will be that and customer cars simultaneously.
You're saying the two together. Okay.
Yeah, I mean, there may be some Tesla cars because, as I explained last time, I do believe they're keeping 3s and Ys that are coming to the end of their lease now because they want to use them. So that's why I also think they're not doing a huge effort on inventory anymore. We'll see at the end of Q2, but I would not be surprised if that is part of the deal.
So you don't think they need to wait for the Robotaxi first designed vehicle before they launch?
Oh no, not at all.
program.
For sure not. Oh, not. I mean, they may have designed it, but for them to be finished and drive around, no. And I would actually encourage everybody to think this through as a business plan for each owner. If you live close to a mall, if you live close to an airport is probably the best example. Your car can do a lot of good. I mean, once this works, they can do long rides, can bring, maybe it's as profitable. I've never been an Uber driver, and I would like to talk to somebody who's an Uber driver of how do you strategically put your roads, where do you put your car to find the quickest client for the longest or for the most juicy. Maybe the longest trips are not the most juicy ones, what do I know? But I think there's a thing to be thought through.
Okay, good.
And what do I get if I win?
A trip to Hawaii.
There we go. I've never been to Hawaii.
You do not. No.
That would be funny.
It's going to be some town in California called Hawaii, California.
Exactly. next to Xander's yogurt shop, you'll see.
You know what, Alexandra, if this all happens, yeah, that's nothing. I'll pay for a trip to Hawaii. All of us will go. Cyber Bulls. I'll pay for it. That's nothing compared to where we're at today. So okay. Alexandra, you do such great work for the Tesla. Now, we've just been so bullish in the first an hour of this call. There are some potential massive issues that can still happen to disrupt everything. And one of them is Elon. And at the earnings call, he kind of addressed it, but I found his answer was kind of middle of the line, right? He said, well, Robotaxi will succeed, autonomy, nothing will stop that. I'm not sure the bot will win. And if I get abducted by aliens, all of this will still happen. But he did say that, well, one option is that if we make so much free cash flow, maybe the company will do buybacks. There's a vote that's coming in the annual shareholder meeting in June 13th. You've been telling everybody, can you tell us what we need to do to make sure that he stays?
So that's actually step 2. Let me start with step 1. Step 1 is next week, in the week of April 29th, you will all be able to download the definite proxy vote statement, the 443 pages. There were a couple of small errors in there. There was a couple of information still missing. So when the definite comes out, that will be the moment to act, and we will obviously let you know. Normally, your brokers will then send you the 12 questions to which they will add what management recommends you to vote, which is the first 5 questions for, the last 7 questions against. You obviously read through the proxy statement and think this through and vote as you want. And then that's that. At the moment, we have, so Elon and Kimball and Lariel doesn't seem to be able to vote because of this Delaware judge who thinks there's too much proximity. So that means we have about 86% of voters who becomes the pool. So the 100% of these 100%, we have about 52.5% institutionals and 47.5% retail. So it's really important that retail mobilizes. There are some retail investors who cannot vote. In Europe, it's quite complicated. So I really hope that we get them. Usually the retail vote was about 29% of 47, so that's not enough. I really, really hope everybody is trying to make it possible to vote. So that's the first thing. And the second thing, if you want to show that slide again, Herbert, is I would like you to mobilize the institutional investors that you know. And so the question is, how do you know them? Well, because you have maybe your pension fund there, your 401k, or maybe you have some index funds from Fidelity or Vanguard or BlackRock, or who do I know? So all those that have access to US institutions, and the Norwegians can also do it with their pension, the state pension group, write to these people and let them know that you are watching what they're doing. So what I have prepared, it's my pinned post, is a letter where I give you some guidance. Obviously, do it in your own names, do it with your own text if you want to, but let them know that you want to be kept informed what they decide, because the money that you have with them and which you cannot vote, meaning the ones in index funds or mutual funds or ETFs that you have there, they are voting for you. So make sure they understand that you're watching them. So that's the letter. That's my second tweet. And there's the link to the Google Doc that has that letter example. So that is this one. And then the other thing is, in the third one, please. In the third one, I give you all the email addresses where to send that, and copy, and I learned that from one of my Cyberball brothers, copy management in there. So I give you for BlackRock, Larry Fink's email and all that. Do that. Be brave. It doesn't matter. Let them know that we're all watching. So you have all the instructions for the 6 biggest institutions, just so you copy it together and send it off. There's also a list of all the ETFs that are currently holding Tesla, so you can check whether your ETF has some Tesla stock. So if you want to make it more personal, you have that information. So first, vote yourself. Second, write to whoever has any funds of you, so that you can include that to those fund managers and say, we're watching you. And I've put those links there as well. They have to then once per year publish how they voted on all these items. So we will know how they voted. We will know who is for and against management. And so they should know that we know how to research that information, because you now have access to that information. And this is not over yet. Just want to stress this, because I think this is always a good moment. This is not over yet. So even if this all goes through perfectly, that doesn't mean that the next day Elon gets his 2018 compensation package again. This is already being put in question by the plaintiff's attorney in the Delaware court case, and I'm sure there are going to be other people jumping on this afterwards. But this will give Tesla a strong position to go into the appeal of the Delaware case, because it will say, look, we made another shareholder vote and that was won. So it's not over yet. This Delaware story, in best case, will be over end of 2025. Just because Tesla has clearly expressed in the proxy statement that they want to appeal that initial judgment that's going to be coming out in July, August this year. and an appeal will take at least another year. And there may be other grifters that jump on this occasion to bring up other class action suits at the same level. If, however, this shareholder vote does not go through, it is very unlikely that Tesla has a good basis for the appeal. It doesn't mean they won't appeal, but it will be much weaker. And it will be a situation, I'm not saying there is no plan B. I know there is a plan B already, because if you read the proxy statement carefully, there is a plan B. So I just want to make very clear that people understand that we're voting on three major issues. The first one is voting the board members, Kimball and James Murdoch. Fair enough. The second is redomesticating into Texas. That is actually the most important. That is more important than the third one, which is the 2018 comp package. I mean, obviously, I want all three to pass. But if I would have to say which one is my most important one, it is clearly the one redomesticating to Texas. Why? Because once we get that through, fair enough, we still have to deal with a lot of old crap in Delaware, but there is a new point in time from which new things can be built, including a compensation package. And for all those that want to read between the lines, I'm not going to give much more clues, but what I want you to do, if you are interested in all this governance stuff, is read page 183 forward. There are lots of clues in the 5, 6, 7 pages that follow there of what they are planning to do in Texas. And I don't want to push it, and I don't want to make too much secret out of it, whatever. But that should give you comfort to say, okay, let's get restarted the new company in Texas.
Okay, we need to spread that information. The most important one is the Texas. What's the chances, Alexandra, this notion that Elon said, well, if you have cash, we can just do buybacks to bring down the shares and give him a higher percentage? And what are the chances that you just interrupted my thinking? Why'd you laugh? So the buyback and the proxy shares that just by moving to Texas, they do the proxy shares. And then the other concept would be, let's say all this goes to crap, but the company's gonna do massive growth if robots work, if energy works, if autonomy works, and so then maybe they can just give him a new package and make sure that he still makes good.
So that's plan C, no doubt about it. So to address the
buybacks.
It's funny how Wall Street always hears what they want to hear, right? They hear buyback and it goes, yeah, wonderful. He didn't say there's a buyback tomorrow. He answered the question whether buybacks was an opportunity for him to get to the 25%. And that is true. There is one, because the buyback reduces the numbers of share outstanding. So each of us gets a little bit of a bigger piece. And obviously him having 13% or maybe 20% again, if those 2018 share package comes back, his part will grow as well. But I think they have a very good plan B to make that possible already before. Think Meta, who has much higher voting rights for the founder compared to the normal shareholders. Think those strategies, and I think they are making sure that there is lots. So for me, the buyback was a nice bone thrown to Wall Street. It's not the first time, by the way, he's doing that. Q4 2021, he did the same, right? Oh, I have to ask the board, but I'm all for it. Sure, nothing ever came, and actually, a good reason. I mean, they were wise not to do it, given the negative cash flow we have now. It was good not to do it. You know, Tesla will grow. I don't know whether it's in 1 year, 2, 3, or 5, to the point that they will not know what to do with the cash anymore. Then it's time for buybacks, but not before.
Oh, we are so fortunate to have you, Alexandra. Honestly, I think maybe there's a handful of people, even less, 2 people, who knows everything of what you're talking about. Thank you for your advocacy. Why do you do this?
I love it.
You guys
I love this, and I love my car. I just need to sit in my car for 2 minutes to be motivated and galvanized again.
Just because of the car.
Yeah, that's it. It's a wonderful machine.
I love all this because I love technology, and this is like the leading edge. Here we are. I'm interviewing CEOs of bots, and I'm like talking robotaxi and autonomy, what can be. And what about you, Jeff? Is this just all about the moolah?
I mean, I love the tech. I love the product. I mean, I've been a shareholder for over like 11 years. I like studying and understanding what the company's doing. If I can help translate it, I don't know what's going on. I'm looking at what everybody else sees and reads, and I'm trying to help interpret it and what it may mean for people. And I have a great respect for how the companies actually how they conduct themselves, like that teardown of the Cybertruck, what's actually happening there. They do a lot of the fundamentals very right. And I think the fundamentals that I see them do kind of inspire me and also motivate me as well to want to own a piece of the company. They're managed very well. They manage themselves actually very well. Whether you think Elon's here, there, or whatever, there's no way of actually knowing that, by the way. But what he's done is he's instilled in that staff of 15 people that they've been working for him for over a decade. Like, this is how I do business, and they've instilled that in themselves and their team. So they do product really, really well. Is everything perfect? No. But their approach to how they develop product, how they manufacture product, how they do software, they do a lot of things really, really well. Things that are very difficult to copy, and things that could last for a very long time.
Agree. And I mean, never forget that Apple didn't even try anymore, right? Building these cars and everything that now will build on it, nobody can even come close to it.
All right. Well, guys, first of all, I rarely do this, but please like this video. We want to grow Cyber Bulls, and we've got, we got two of the most powerful minds out there. I really appreciate you guys. Follow Jeff on X at the Jeff Lutz. He is somebody that should really deserve hundreds of thousands. And then there's Alexandra, who already has 100,000, but she wants 1 million. So she's not going to be satisfied until she gets 1 million followers. Please follow her also. Poor Alexandra only has 120,000 followers.
150.
Follow Herbert. Herbert pulls it all together. So
He does. Brighter with Herbert.
Brighter with Herbert. Okay. Thank you, guys. Thank you very much.
Thank you.
Great show. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.